Yes, your export contract is also what you already have in your letter of credit, but it's the export contract that you've drafted from your company to the importer that's going to guide what is actually going to be inside your letter of credit. So, my advice is whatever transaction you are doing, always make sure you have an export contract that you send to the person, either in local supply or for export. Always make sure you have a solid contract that you sent out to the person. So, alongside the LPO that a company is going to give you, that okay, supply us soybeans 1,000 tons, supply us cashew nuts 500 tons, supply us sesame seed or millet or hibiscus, whatever the commodity might be. You make sure that you give them a separate export contract, because some agreements are not, even though they are binding, they are not bankable. So when they are not bankable, you have to there has to be something like an extra insurance, something that will give at least some level of guarantee that you get your payment at the end of the day, because a lot of people do the business and at the end of the day they don't get paid. So getting paid is one of the most important aspects of this business. So you have to always make sure you have your own contract prepared to dish out. So it's when you've given the importer your export contract and you guys have concluded on the terms and conditions, the specification of the commodities you are giving out, the time frame for the deadline that you have to deliver and all that, then he can now go ahead and talk to his bank so that they can award you with an LC. So the bank will send your own bank a draft, an LC draft, which is the content of what you have in your contract. Your bank will send it to you for you to verify, look at it, review it. If there's any mistake, anything you have to correct and all that. So you send it to your bank. Your bank communicates with his own bank, they communicate with him. So when everything is perfect, your bank issues his own bank issues your own bank the LC, and when your bank confirms, they will tell you to go ahead, that the LC is ready or has been prepared and confirmed, before you can now go ahead with whatever you want to do. But when we are discussing about local supply commodities chain, the LPO, that is local purchase order, that the company is going to give you, is not a bankable instrument. It's not an instrument you can take to the bank, or that you can use to get money from a bank like an LC. An LC is also like a check, which means the money is already there. Just bring it, just tender it, and you'll be given the money. So, but for an LPO, it's just like an agreement asking you that, oh, we are asking you to supply us so and so commodity. And so that's why I wrote alongside LPO or bank draft. So for local supply, it's always good that you could get either advance payment, or you can get a bank draft, or you can get a bank draft. So that's the best bet. If you have a bank draft, it's easy, because bank drafts are bankable. It means the buying party has the money in their account. So all you just have to do is tender your draft to your bank, and your bank will pay you for it. So but for an export, alongside the letter of credit, make sure that there is a letter of credit going with it. Okay. So for your export contract, your export contract, when you structure it out, it's supposed to have from you the number, your contract number, the full name and address of your company, your company details, then the importer's company details also, his own full name, address, uh, the name of his company, his address, the date, his contacts, his email, his phone numbers, and all that. You must have all those details so that just in case if anything happens. So it's always also good that before you execute an export contract, you can request for the importer's ID card, international passport details, his ID card, or whatever other verification material that you can get, so that in case you've executed the contract and the payment is not coming out, so you have the tools or the right information to track him or her down, or to uh, take up some actions that will destroy his own reputation over there. So those are things that you can do. Okay, so then the name of the product or goods, maybe it's cashew nut, raw cashew nut, or processed cashew nut. You put the name, then the specification, maybe the moisture content, the color, the size, the packaging, and is it going to be clean, unclean, the product, the harvest year, everything will be in the specification, whatever, however the importer wants it to be. So that's what you also get for him. Then the quantity he wants to buy also will be there. Then there will be a packaging method or a standard that is required by the buyer. So the buyer will let you know. Maybe he wants you to use paper bag, maybe he wants you to use jute bags, maybe he wants you to use a polypropylene bag. So he'll let you know. Then the agreed export price. When we're talking about payments and incoterms, we're talking about some ports. I was listing ports under the FOB, which is the free on board. I listed the Apapa port, Tinkan port, Delta port, Calabar port, Rivers port. So we have all those ports. So which port are you guys agreeing on? Is his price from Tinkan Island port? Is it from Apapa port? Is it from Calabar port or from Rivers port? So don't be surprised that all these importers also know the rate. They know the shipping rate from each port in Lagos, in Delta, in Port Harcourt, in Onne. They know all those shipping rates. So they'll even be the ones telling you that, oh, from so place is also price now. That maybe your price is too expensive and you guys should negotiate it out. So they'll be the one to let you know sometimes. So you be the one to propose that, okay, I use Apapa port, or maybe my freight forwarders, my guys are in Apapa or they are in Tinkan. So once you guys agree, you know that, okay, your goods is coming from so port. Then the port of delivery, that is the importer's port, where he is. Maybe he's in Dubai. Which port does he want to use? Maybe he's in Vietnam. Which port is he going to use? Maybe he's in Ghana, he's in Kenya. So they will tell you the port of discharge where the ship is actually going to deliver their container. Then term of sales will be in your export contract. Is it FOB? Is it cost and freight? Is it cost, insurance, and freight? So There will be an agreement of on your term of sale. Maybe the container is only going to get to the port, and that will relieve you of the job. You are done with your own work. Or maybe it's going to get to his own port, and he's going to pay you for the cost of production of the product and the logistics and the freight, and the way we broke it down. So do not forget that. Then the method of payment in which he's going to pay you, we're also going to state it there. Maybe it's open account, maybe it's documentary collection, maybe it's LC. We're going to state how he's going to pay you. Then shipment, delivery term, cargo to be shipped 2 weeks upon confirmation of payment instrument. So there is always a time frame for delivery. Even the letter, even if the buyer is giving you a letter of credit, the letter of credit also has a time for an expiry date, a time when it's going to be expired. So you still have to work against that time to deliver, to make sure that okay, you get the goods delivered to him. Then both of you sign. He signs, you sign over here, you send it to him. He signs it and sends it back to you. Sometimes, if the deal is very good and you are trustworthy, they will come to your office here in Nigeria. You both sign and all that. So the export contract usually is prepared will be prepared by you, the exporter, and sent to the importer, because he will not be the one going around trying to get you an export contract. He will be the one. He will just maybe talk to his own bank to issue a letter of credit, which is what